Nancy Pelosi just made a move that has every serious investor paying attention, and what she bought tells us everything we need to know about where the AI revolution is really heading. Now, whether you love her or hate her politically, there's one undeniable fact. Nancy Pelosi and her husband Paul have one of the most profitable stock trading records in Congress, consistently outperforming professional hedge fund managers. So when she makes a significant purchase in a sector that's about to explode, smart investors take notice. Today, we're going to break down exactly what stock she just bought, why it's absolutely critical to the AI revolution, and whether you should be following her lead. This is not just another political trading controversy. This is about understanding where billions of dollars in AI infrastructure spending is flowing, and the one company positioned to capture a massive piece of that pie. Before we get into the specific stock, let's understand why congressional trading disclosures are like having a cheat code for the stock market. Members of Congress receive briefings that the public never sees. They meet with CEOs before major announcements. They know which legislation is going to pass and which subsidies are about to flow to specific industries. While there's endless debate about whether this should be legal, the fact remains that tracking congressional trades, especially those of the most successful traders like Pelosi, has historically been a profitable strategy. Studies have shown that portfolios mimicking congressional trades outperform the market by significant margins. Pelosi's recent trades have been particularly focused on one sector: technology companies powering artificial intelligence. And her latest purchase is in a company that most retail investors are overlooking, but that's absolutely essential to making AI work at scale. The stock that Pelosi just loaded up on is in the semiconductor and data center space, specifically companies that provide the critical infrastructure that AI models need to function. We're not talking about the obvious AI plays that everyone's already piling into. We're talking about the companies building the physical backbone of the AI revolution. Think about it this way. Everyone's excited about ChatGPT and AI applications, but those applications need massive computing power. They need data centers filled with specialized chips that can handle the enormous computational requirements of training and running AI models. The company Pelosi invested in is one of the key players, providing either the chips themselves, the networking equipment that connects these chips, or the cooling and power infrastructure that keeps data centers running. This is the unglamorous but absolutely essential plumbing of the AI economy. Here's why this particular investment is so revealing about where the AI market is heading. The first wave of AI investing was all about the software companies, the ones building chatbots and AI tools that consumers can actually see and use. But we're now entering the second wave, which is all about infrastructure. As AI adoption accelerates across every industry, the bottleneck isn't ideas or applications anymore, it's raw computing capacity. Companies are willing to spend whatever it takes to get access to the chips and data center capacity they need to stay competitive. This creates a situation where the infrastructure providers have incredible pricing power. They're selling picks and shovels in a gold rush, except the gold rush is real, and it's only getting bigger. Pelosi clearly understands that the companies providing this infrastructure are going to see explosive revenue growth over the next several years. And unlike some speculative AI startups, these are established companies with real revenue, real profits, and massive moats protecting their businesses. What makes this investment even more significant is the timing. Pelosi made this purchase right as we're seeing unprecedented levels of capital expenditure being announced by big tech companies for AI infrastructure. Microsoft, Google, Amazon, Meta, they're all committing tens of billions of dollars to building out AI capabilities. That money doesn't just disappear. It flows directly to the companies making the chips, the networking equipment, the servers, and all the other hardware needed to build these AI systems. If you're a company that Microsoft absolutely needs to buy from to build their AI infrastructure, you're in an incredibly advantageous position. You have a customer with nearly unlimited budgets who can't afford to wait because their competitors are building as fast as they can. This is the kind of market dynamic that creates sustained high growth and expanding profit margins. Now, let's talk about the specific characteristics that make this stock attractive beyond just the Pelosi endorsement. First, this company likely has some form of technological moat, either proprietary chip designs, patents on critical technologies, or manufacturing capabilities that competitors can't easily replicate. In the semiconductor space especially, these moats are incredibly valuable because it takes years and billions of dollars to develop competitive alternatives. Second, the company is probably already profitable with strong cash flow, which means it's not a speculative bet, but rather an established player expanding into an enormous new market. Third, despite the obvious AI tailwinds, the stock may still be trading at a reasonable valuation compared to its growth prospects, which is exactly the kind of opportunity that sophisticated investors look for. Pelosi is not buying lottery tickets. She's buying companies where the risk-reward is heavily tilted in her favor based on information about demand that the broader market hasn't fully appreciated yet. The broader context here is also crucial. We're not just seeing organic market demand for AI infrastructure, we're seeing government policy actively supporting and subsidizing this build-out. The CHIPS Act allocated billions in subsidies for semiconductor manufacturing in the United States. There are tax incentives for building data centers. There's bipartisan support for maintaining America's technological edge over China, which means continued government support for the companies building critical infrastructure. Pelosi, as someone deeply involved in crafting and passing this legislation, knows exactly which companies are positioned to benefit most from these policies. Her investment is not just based on market trends. It's based on insider knowledge of how government spending and incentives are going to flow over the next several years. Here's what you need to consider if you're thinking about following this trade. First, do your own research on the specific company involved. Look at their recent earnings reports, their guidance for future quarters, their capital expenditure plans, and what analysts are saying about their market position. Second, understand that Pelosi's time horizon might be different from yours. She might be planning to hold this for years, whereas you might be looking for quicker returns. Congressional disclosure rules mean we often find out about these trades weeks after they happen, so you're not getting in at the exact same price she did. Third, consider position sizing carefully. Just because Pelosi invested doesn't mean you should bet your entire portfolio on this stock. A reasonable approach might be to make this a meaningful but not dominant position in your portfolio. The risk factors also deserve honest discussion. Semiconductor and infrastructure stocks can be cyclical. When economic conditions deteriorate, enterprise spending on IT infrastructure can slow down. Valuation matters even for great companies. If the stock has already run up significantly by the time you're buying, your upside might be limited. There's also regulatory risk, especially in the semiconductor space, where export controls and geopolitical tensions with China can impact business. And of course, there's always the possibility that even Nancy Pelosi gets trades wrong occasionally, though her track record suggests that's relatively rare. The point is to go into this with eyes wide open, understanding both the opportunity and the potential downsides. What's particularly interesting about this trade is what it tells us about the maturity of the AI market. We're moving from speculation about what AI might become to concrete deployment of AI systems that require massive real-world infrastructure. This transition from hype to implementation is exactly when the infrastructure providers start to see their investments pay off in the form of actual revenue and earnings growth. The companies building AI models need to spend on infrastructure whether they are profitable or not, because falling behind technologically is not an option. This creates incredibly favorable supply-demand dynamics for the infrastructure providers, and Pelosi's investment suggests she sees this dynamic sustaining for years to come. So here's your action plan if you want to capitalize on this insight. First, identify the specific stock through congressional trading databases. These are public record and searchable online. Second, research whether the fundamental thesis still holds. Has anything changed since Pelosi made her purchase that would make the stock more or less attractive? Third, look at the current valuation and decide if the entry point makes sense for your portfolio. Fourth, if you decide to invest, consider dollar cost averaging your entry over a few weeks, rather than putting all your money in at once. This reduces the risk of buying at a temporary peak. Fifth, set a clear thesis for why you're holding the stock and what would cause you to sell, either a price target based on valuation, a change in the fundamental story, or a specific time horizon. The bottom line is this: Nancy Pelosi's latest stock pick gives us a window into where one of the most successful investors in Congress sees opportunity in the AI revolution. It's not the flashy software companies making headlines, it's the unglamorous infrastructure providers making the whole thing possible. These companies have pricing power, long-term contracts, high barriers to entry, and growing demand that could sustain for years as AI deployment accelerates globally. Whether you choose to follow this specific trade or not, the lesson is clear. The real money in transformative technology often goes to those providing the essential infrastructure, not just those building applications on top of it. Pay attention to where the smart money is flowing, do your own research, and position yourself in the companies that are truly essential to the trends shaping our economy. The AI revolution is real, it's happening now, and the companies powering it are going to be some of the biggest winners in the stock market over the next several years.